All right, thank you very much. So thanks everyone for joining. For today's session, we'll give you some insights, hopefully actually see digital money in action. Some of you may have experienced it at the festival. Maybe just to start off, at this festival, I guess we had a couple of highlights as far as some of the initiatives that we're working on, the future of finance. One is around digital assets, digital money and digital infrastructure. Some of you may have attended our showcase, the Project Guardian Mega Update, that's really focusing on digital assets. Today, we'll be speaking about digital money, which is underpinned by some of the work that we are doing under Project Orchid. So alongside the announcement, maybe just a context on Project Orchid. So Project Orchid really started with a view to understand what the potential use cases for digital money in Singapore and the infrastructure that's required. So yesterday, we've made an announcement as far as the blueprint that we have put out, just setting out our current thinking in terms of the technology infrastructure that's required. We've announced a couple of new pilots. We will be speaking about some of the pilots that have been conducted and also maybe give you a preview of what to expect. We've also made an announcement as far as laying out our plans or indications to work on live issuance of wholesale CBDCs in the next year as well. So perhaps with that as a backdrop, I will pass on time to my co-moderator, Laura, to fill you in perhaps on purpose-bound money and digital money. Laura.
Okay, thank you so much, Alan. Well, good afternoon and good evening, everyone. Thank you for joining us today. I'm so happy to see that, the crowd is here. It's not thinning because it's usually at the end of the sessions, we always see thinning crowds. So very excited to be here and hoping to get a lot of energy in the room. Okay, onwards to digital money. Now, as all of you know, when we evolve the digital economy, we see the financial landscape undergoing a profound transformation. Increasingly, we are seeing new mediums of exchange, such as CBDCs, central bank digital currencies, tokenized deposits or tokenized bank liabilities, as well as well-regulated stable coins taking center stage. Now, the programmability of digital money is actually a key advantage because while we see that digital money is not a new concept, the current wave goes beyond the realm of e-money that we are familiar with through various payment options. Programmability of digital money facilitates automated transactions, predefined conditions, as well as streamlined financial processes. This programmability extends to support atomic settlement of digital assets, making a significant shift in the way we handle financial transactions. So at Temasek, we have witnessed firsthand the transformative power of digital assets in reshaping financial transactions and global engagement, from central bank digital currencies to stablecoins to tokenized bank deposits or liabilities. These digital representations promise faster, more inclusive, and higher value transactions, more valuable transactions. However, to fully unlock their potential, we must transcend the capabilities of existing electronic payment systems. Our interest in supporting the advancement of technologies for supporting new financial market infrastructure has led us to work on purpose-bound money, PBM, together with the MAS as well as industry participants. Now, PBM is a novel approach to programmable digital money that allows funds to be directed towards specific purposes without altering the money itself. And how do we achieve this? This is achieved through a standardized protocol and smart contract code, maintaining the core properties of digital money while accommodating various use cases, striking a very delicate balance between programmable money and programmable payments. And this helps to ensure that the directed usage without compromising liquidity and fungibility. So as Alan has mentioned, in the first phase of Project Orchid, the industry together with Temasek as well as MAS has collaborated with partners to explore use cases such as programmable vouchers. I think some of you who have attended SFF last year would have had the chance to use some of these programmable vouchers. We've also experimented and looked at the technical feasibility of purpose-bound money as a common protocol for specifying conditions for digital money. Now, building on this foundation, in phase 2, the project has adopted a two-pronged approach. Firstly, multiple industry-led digital money pilots have expanded the use case of purpose-bound money across new scenarios. And secondly, an industry group was formed to examine how digital money could be effectively incorporated into Singapore's payments and financial system. Today, we are very honored to have representatives from Amazon, Grab, UOB, OCBC, as well as JPMorgan to share their experiences on the various use cases that they have experimented with purpose-bound money.
And of course, StreetX.
Oh yes, and not forgetting StreetX. Tian Wei, love you there, okay? Now, these pioneers have been very instrumental in delivering innovative solutions into real-world problems and enhancing the efficacy of or efficiency of digital transactions. So our agenda today includes individual industry pilot showcases where the representatives will provide insights into their experiences with purpose-bound money across different sectors, from escrow arrangements that's going to be piloted by Amazon, to demonstrate e-commerce usage, to fungibility trials for digital Singapore dollar and institutional PBM with payment controls for deposit token transferability. We are excited to explore the diverse applications of programmable digital money, and this promises to be an insightful session offering a closer look into how PBM is shaping the future of digital transactions. Now, without further ado, let's delve into the industry pilot showcase and hear firsthand from our distinguished guests. Now, first up today is Kenny from Amazon, who will be delving into escrow arrangements for online retail payments. Kenny, please.
All right.
Hey, very good afternoon, everyone. So before I begin, we really want to thank MAS as well as local champions, StreetX as well as Grab, for working with us on this industry pilot. My name is Kenny. I'm a payment innovation lead at Amazon. My role entails enabling and facilitating payment innovation across all of our customers here in APAC, across buyers, sellers, vendors, and the likes, right? So part of this industry pilot that we're working on, as the title suggests, escrow arrangement in e-commerce, is really part of our initiative to be able to help bring some of these abstract concepts to you and I here, right? What does it mean for a purpose-bound money in everyday, day-to-day retail purchases, right? Last year, as Laura mentioned, you guys had a chance of sampling what it means to use programmable vouchers. So let's take that one step further. What does it mean to actually do it on an actual online retail application? What benefit does it bring, right? So we're very excited to be able to do this. So without further ado, let's take a look at what this really means and what we've done as part of this pilot. So we've actually built a sandbox version of our store on Amazon.sg. We offered like maybe 5 to 6 different freebies that we wanted to give away. We worked very closely with StreetX as well as Grab to be able to offer something that is close to everybody's heart. So when a customer comes onto the store, we allow them to connect their Web3 wallet with us, in this case Grab, or if you choose to have any other blockchain or Web3 wallets, you could also do that through open source Web3 protocols such as Wallet Connect, allowing us to use effectively any blockchain wallet that you own. So once connected to the store, right, what we will do is actually we'll give you a NFT voucher, $10. This is really building on last year's effort, programmed just specifically for this demo. But beyond that, allowing you to be able to do something more than that. So we wanted to showcase what it means to be able to escrow, earmark, or authorize a payment. This, you may ask, oh, I get this all the time, no? With like credit cards. But you realize it's actually a very card-specific capability. Outside of credit cards, you don't actually see this, right? Whether it's instant payments, wallet payments, and this is actually going to be very important, and I'm going to show you why. So for a start, what happens here is when the voucher is loaded into your wallet, they will be able to see on the Amazon site that they have $10 in their wallet. So we read directly on the blockchain to see how much money they have. So when they actually go onto the store, they place an order. What we do is that we invoke an API on the smart contract that would otherwise wrap your voucher and effectively escrow, earmark, block it, however you want to call it, right? What this does two things concurrently. One, for the customer, there are groups of customers today where they are very focused. They prefer to only pay when they see the goods. So when they receive the goods, then they want to pay. So this allows them to actually enjoy the experience. But what happens here is that for actually any merchant or seller who wants to do that, there's actually a big risk, right? If you want to be able to execute payment on delivery, without this capability, you have no confidence that the buyer can actually pay. So this gives assurance to any merchant or seller that the customer can actually pay for their goods before even delivering. So two benefits to both sellers and buyers alike, right? And so when the customer actually purchases, we wrap it around, we reflect on the site to say, hey, look, you now have $10 in your wallet. I've placed a hold on the token, and what's available to you is 0 in this case. It means that this token, which is still in the wallet, will not be available for use if you want to spend it on other merchants, assuming there's one. So what happens is, but you still fully ensure that the funds or the token still remains in the customer wallet itself. So only when the customer actually picks up their order, whether it's collection, whether it's a delivery, and an event to trigger the unwrapping of the voucher. So in this case, if you were to go to the demo, somebody would scan the QR code that you receive, you pick up your goods, that triggers the release of the wrapper, and then only then does the token or the voucher actually leave the customer's wallet and into the seller. So all in all, this is a very simple scenario, but it actually brings about many, many interesting objectives that we want to showcase. One, we truly believe that through this, there is potential in retail programmability. Right, what does this mean? Right, with the new digital money, with the stable coins, tokenized bank liabilities, or even CBDCs, the ability for money to be programmed allows these things to happen very easily, right? So merchants don't have to worry about setting up various application services just to be able to support what I just showed you earlier, right? If money can be programmed, it can easily support earmarking functionalities, recurring payments. So recurring payments to be able to enable digital services is very common, whether you want music streaming services, video streaming services, subscription plans. You don't actually find that outside of a card again. You can't easily execute that with wallets or with Pay Now, Fast, etc. Right? So that allows us to be able to apply some of these smart contract logic, right, into the payment itself to be able to fulfill everyday, day-to-day online purchases, as well as offline as well. So interoperability is also something that we looked at, right? Through the Wallet Connect itself, one of the concepts that we want to show was that, hey, through a certain set of standards, we are actually able to connect to multiple wallets at the same time. As a merchant, it's actually very difficult to do bilateral, like one-on-one wallet integrations. Right, that can be very painful. There's a lot of integration effort involved. So through Wallet Connect, the concept that's being displayed, that is being shown here, is the fact that through certain standards, through certain protocols, as a merchant, you don't actually have to worry about how many wallets are there out there. Customers can choose the wallet of their choice and still be able to pay you with any wallet that they use. So a lot of concepts that we really explore here across retail programmability and interoperability. So one of the plug is, if you have tried it already, you can still continue to go to our booth later. And we have actually reset everybody's profile, so you can actually get one more round of freebies if you want to. And if you haven't tried, please go ahead. There's some very fantastic Pitstop pack vouchers available, still available. So go try it later. We will close around 5 o'clock. So Really, we truly believe that money itself, right, can be programmed beyond all of these abstract concepts of like, Web3, beyond digital money. Like we see future and programmability to solve actual problems that we face across online and offline retail. So we're very happy to say that, based on yesterday's announcement by MAS, we're also working with HSBC as part of the next part of what we're going to do with Project Orchid to explore some of the ways that we can help with merchants or sellers financing through tokenized payables to be able to support and help merchants actually get financing at a lower cost and at lower denominations. So more to come on that. And that's all I have. Thank you very much.
Thank you, Kenny. But before that, do stay on the stage first. So we're going to do this a little bit like a Shark Tank style, right? We're going to ask you some questions. Some may be benign and some may be not so benign. So bear with us, right? So the benign question will be asked by... but you first.
So Kenny, I guess you kind of highlighted this, but maybe for someone that's coming into the FinTech Festival next year, what can they expect from Amazon?
Wow, a very interesting question. So hopefully, as I mentioned earlier, we're working with HSBC to explore various options to be able to help sellers improve their working capital. So exploring this concept, I personally believe that it's a very, very powerful challenge. It's a very powerful solution, possibly a solution to a real-world challenge out there where SMEs, specifically smaller merchants, businesses, have difficulty have difficulty accessing financing. It's either they can't get it because it's too expensive, or banks often find it difficult to work with them because the quantum that they're looking at is often too small, too small for banks to be able to cater to them. So through this project, we believe that there's opportunity for us to bring programmability to solve some of these challenges that SMEs face, and eventually helping them to be able to achieve financing, and like I said, at a lower cost and lower quantum.
Okay, thank you, Kenny. And
Yes.
the not so easy question. Why is Amazon interested in purpose-bound money? Was it because you were late in the wallets game and you find that this is something to get you back into the wallet space, and this would be the one that's providing you the edge?
No, not at all. So why are we interested in purpose-bound money? So as I said earlier, it's always about us finding ways to solve problems for our customers, innovating on behalf of our customers. Right? We see challenges today with existing payment instruments, right? Case in point, not trying to complain, but with PayNow, it has been an extremely great, payment method on Amazon.sg today. But there comes a lot of challenges from a CX perspective. For example, most of our purchases come through the mobile. I'm sure most of you do your online shopping on the mobile, but mobile and the PayNow QR don't exactly work well together. Right, so it really is understanding how we could try and drive some of the improvements of next generation payment methods to be able to make sure that customers can easily shop on Amazon. We are able to deliver much more value to the customer and eventually help them to be able to shop better and provide more inclusion for our customers.
All right, we'll let Kenny go for now, and if we have time, we'll come back to him. So thanks, Kenny.
Thank you.
Next showcase, we have not one bank, but two banks. So we have the opportunity of having both OCBC Bank as well as UOB collaborating on showcasing the feasibility of enabling tokens issued by one bank to be accepted for retail payments by another. So if I can just bring up the UOB team, who is represented today by Prashant and Lissel, as well as the OCBC team by Jordan as well as Kwan.
Hello. So thank you, Alan. I must start our discussion by telling everyone that how privileged and how thankful we are that we are the first two banks in Singapore to start the fungibility trial of the wholesale CBDC before it actually goes live. So it's still simulated, but we have done the testing this year during the FinTech Festival. Now, having said, we are going to have a slightly different spin to purpose-bound money because we are not really going to be focusing much on the use cases, but what is underneath the purpose-bound money. What is the store of value? This different type of digital money you would have heard about. It could be a regulated stablecoin. But in today's presentation, we're going to focus on tokenized bank liabilities. So imagine that the conditions are met, and that when it's unwrapped, tokenized bank liabilities from OCBC and UOB will be out there. And imagine that you are a retail, you're a user or you're a merchant, and you have these different type of digital Singapore dollars. What would that mean to you? In short, it should not be different. It should be the same, one and the same. So just to give you an analogy, the LKY 100 $10 coin, $10 note, store value $10 should be the same. Although we will be giving more premium to the coin because of the rarity, right? But the underlying store value is the same. Proving point, OCBC tokenized bank liability should equal to UOB's tokenized bank liability in terms of store value and how much it's worth. So going back to this, we would, as and when these tokenized bank liabilities and the PBMs are used, then you can imagine that the respective banks will start to build up positions, interbank positions. And we will have to clear the respective tokenized bank liabilities with the other bank. And how do we do this? That is where the wholesale CBDC comes in. In this case, it's still simulated, but it's going to go live. At least the pilot will be tested next year soon. So I'm not going to steal the thunder from my next fellow speakers. So I'll hand over the mic and the clicker to Jordan, who will take you through some of the technical considerations of how we can achieve this.
Thank you. Hi, everyone. So I'm Jordan. I'm Worth Kwan at OCBC. First thing is to go on to the next slide, which talks about really how we are going to achieve fungibility of digital currencies from a technical perspective. So let's start this with a very simple question. How can we ensure that CBDC moves and settles correctly? So in order to achieve this, we found that we need to consider three major factors. Firstly, it should be easy to authenticate the CBDC. Secondly, it should be easy to adopt and use the CBDC across different parties. And finally, it should be easy to transfer this CBDC across different ecosystems. Now, here at OCBC, we found that blockchain-based smart contracts, particularly the purpose-bound money or PBM design, to be a useful and good solution to this end. Firstly, we are able to achieve the easy authentication of the CBDC by simply tracing the blockchain to check the issuer and issuance conditions. Secondly, we can achieve easy adoption as well as usage by different parties through the well-adopted standardized smart contract templates that are out there today, reducing technical friction and enhancing the ability for people to just use and plug and play into the ecosystem. Finally, we found that we are able to achieve easy transferability across different ecosystems because blockchains have standardized computation. Let me give you an example. If I have digital money flow on blockchain A, and I want to transfer that to blockchain B, as long as I have standard computation on blockchain A and blockchain B, I am guaranteed the same money flow execution on these two blockchains. And this actually allows us to interoperate across these different ecosystems. Now, next, the question is, how did we at OCBC implement PBM to meet this technical fungibility? So today, we are using two different kinds of smart contracts. Firstly, we have a condition set smart contract, and what it does is it captures and exposes conditions as a module. Secondly, we have a PBM smart contract, which helps us wrap the CBDCs around within these condition sets. So let me use this diagram and give you a very clear example. Assume a consumer is issued 10 OCBC PBM, and this consumer wants to spend $5 at one merchant and another merchant. The first thing it does is it goes through one condition check, which is the attestation check. Now, this attestation could be treasury, could be credential, it could be any kind. But the goal of this condition is to act as a filter to determine whether we can accept or reject this flow. Now, we can even go further and layer on more kinds of condition sets. In this case, for example, a whitelisting check, which in this case acts more like a router, determining if the wholesale CBDC can be unwrapped to the merchant's bank. What I'm trying to say here is that the way we have designed this is that you're able to mix and match condition sets and programmatic flows through the PBM smart contract. And this is done in a very modular, composable manner, therefore allowing us to actually design a digital monetary ecosystem like Lego blocks. On one hand, seamless plug and play, and the other hand, transparent co-building of the ecosystem, today with our dear partners MAS and UOB, tomorrow with many, many more. So, I hope that this has given us a bit of clarity on how we have used PBM to achieve our goal of technical fungibility. And I would like to take any questions, but before that, I would like to pass on my time to Prashant, our dear friend from UOB, to take through another view of fungibility.
Thanks, Jordan. Good afternoon, everyone. I'm Prashant from the Strategic Alliances and FinTech team at UOB. What I'm going to do in the next few minutes is I will first quickly compare the two models, because OCBC and UOB, we used slightly different model to achieve this fungibility trial. And then I will walk you through the journey which all the visitors experienced here at the FinTech Festival at our booths. So let me start with comparing the models. As you can see, for CBDC issuance, there was no difference in terms of approach. Both the banks requested MAS for the CBDC, and in return, MAS provided us the wholesale CBDC in our respective wallets. Of course, in the real world, banks will increase their fiat reserves to achieve this wholesale CBDC request. Okay, moving on to the creation of PBM token, this is where the approach was slightly different. For UOB, what we did was, once we received the wholesale CBDC from MAS, we actually minted our own digital sync dollar at the backing of wholesale CBDC provided by MAS. So you can see at the core of the purpose-bound money, we have UOB digital sync dollar. Whereas what OCBC did, they adopted a different approach. What they did was they wrapped the wholesale CBDC itself to create the purpose-bound money. Now, both the approaches have certain benefits. For UOB model, the wholesale CBDC reserves are not locked up when we mint digital sync dollar. And digital sync dollar is still backed by the wholesale CBDC. And this model can support fractional banking in future. Although for this pilot, we used 1:1 ratio of wholesale CBDC to digital sync dollar. But as you know, that's not how the real world works. But this model will be able to support such things in future. Coming to OCBC, the benefit is, first of all, the most important thing is the seamless interbank settlement. Because for OCBC model, as soon as the purpose-bound money enters the UOB, it's unwrapped and we receive the wholesale CBDC, which is kind of wrapped inside this purpose-bound money. Moving on to the next slide, this is the final bit, which is the interbank settlement. So in case of UOB model, this happens in two stages. First, OCBC sends us the digital sync dollar back, and then we return the wholesale CBDC back to them for completing the interbank settlement. Whereas for OCBC model, like I explained to you in the previous slide, the wholesale CBDC itself comes out of the wrapper and gets deposited into the UOB wallet for the completion of the interbank settlement. So that's the difference. Now, what I will do is I'll show you a quick video of the journey which visitors experienced at our respective booths. So let me play a short video for you. So the visitors first entered the Singapore FinTech Festival. That is when they see that, okay, UOB and OCBC are running the fungibility trial. So in this video, we start the journey at UOB booth. So you enter the UOB booth and start the journey. Our booth ambassadors will scan the QR code on your badge to create a unique blockchain wallet for you. Once this unique blockchain wallet is created, the purpose-bound money is deposited by our booth ambassadors in your wallet. So now once you have this purpose-bound money, you are ready to go to OCBC booth to kind of redeem the purpose-bound money which you have. So once you visit OCBC booth, their booth staff will scan the QR code of your badge. That is to identify the unique wallet which was created. And once the wallet is identified, they will actually debit your wallet and credit OCBC wallet to complete the transaction. And that is when you receive your token of appreciation. So I hope you were able to visit our booths and enjoy this journey. If you haven't, please do so. We still have some time. And this journey can be started at either booth. You can start the journey at OCBC booth and finish at UOB as well. So that's pretty much from my side. I will now hand it over to Lissel for covering the next section. Thank you.
Hi, good afternoon, everybody. Welcome to SFF. So I'm going to share a little bit about what we learned so far and what are we going to do next. So there are 4 categories that I put up on the screen. So the first one was regulatory treatment. So we call it tokenized bank liabilities. So a lot of effort is putting in to look at existing regulation like Banking Act, Payment Services Act. Does tokenized the deposit falls under the current regulation, or is there some changes that needs to be done from that perspective? We have to do a bit more work next year, but this is something that we kind of unearthed. The next one is design consideration. So today, if you look at deposit, it literally sits within a bank. It doesn't move across the banks. And if we look at token as a barrier that it can move to OCBC as what we trial, then how do we look at KYC component, right? Should there be restriction? So this is another area that we unearthed, and then we are going to deep dive a bit more next year. Third one is consumer protection. So because the liabilities are sitting with the respective bank, so there is an importance for consumer to be aware of where are you holding this liability with. And the idea that we are putting up with is, while consumer can go to one bank, see their tokenized bank liabilities with different banks, but it should be transparent to the consumer. So that's another thing that about disclosure that we must put to the consumer. And then the last one is about risk mitigation. So by tokenizing, does it increase or does it decrease or does it stay same in terms of risk? So these are the basically 4 areas that we really unearthed this year round, which we'll do a lot more work next year. So what are we going to do next year? So Kwan has already spoke about it. One is a trial. So trial today doesn't deal with real money, but hopefully next year when we do the pilot, it will be real money being transacted. And then the second area is really the different discussion point, right, about prudential treatment. How do we back the tokenized deposit, tokenized bank liability? Do we need to lock it up one-to-one? Can we do fractional banking? How do we look at credit liquidity risk, as well as different reporting mechanism, right? Going forward, do we report this separately from our deposit? Do we report it similarly? So these are the few things that we are going to do next year. So we are down to a couple of minutes. So I'll hand over back to Kwan to close up. Right? Thanks.
Yep, it's for everyone to close up together because the last slide is about thanking everyone who was involved in this project, UOB, OCBC, as well as Alan's team. So maybe we still have a minute and 30 seconds left. And I'm assuming from the looks of them, they have questions to ask. All right.
Yes, please stay on the stage. We have a couple of questions. So the easy question from me is perhaps if you could explain to the audience what's the difference with digital Singapore dollar and what you have tested versus something like PayNow and what a consumer may experience today. What materially do you think will be different with such a solution?
Maybe let me start, right? So we know PayNow today, super effective, super efficient, right? You just pay, transfer to someone, but you can't control what it's used for, right? With purpose-bound money, that's where the additional edge comes in, right? You can put a condition. And I like to quote this from DPM last year. If you give pocket money to your children today, you can't control what they use it for. They can use it at arcade, they can use it to buy cigarette, they can use it to buy alcohol, you can't control. But with purpose-bound money, you can put a layer of conditions onto it. You can say children can only use this at school canteen, at bookstore. I think that's the significant additional edge that you get from purpose-bound money in comparison to what we have on PayNow today. Same efficiency, same user experience, easy to use, but with additional edge.
And maybe I'll just quickly add to that. We'll have to see how things evolve, but from a scalability and customization that can be done on a smart contract versus changing customizing the existing BAU systems for payment rail. I mean, we still need to compare the effectiveness and the scalability and the cost factor as well. So this is not something that will touch the consumers directly, but those who are implementing it behind the scenes, this is something that will definitely affect us because it might matter from a cost perspective.
So perhaps the benefits could be seen from a merchant perspective, from somebody that is running grant programs, I guess, or somebody that is, or potentially even bringing down the costs, perhaps, of transfers. I think Laura has the tough questions for you before you get off the stage.
Thank you, Alan. Well, given that UOB and OCBC are known as fierce competitors in the Singapore banking landscape, could you share insights into your experience working together on purpose-bound money initiatives? How did collaboration unfold in such a competitive industry?
Yeah, let me take that. So as you know, right, this industry, which is the future of finance for Singapore, it cannot be achieved by a single bank. It has to be an industry effort. And to achieve this, one bank like UOB cannot work on its own. So that's why collaboration is very important, and we are lucky to have real good partners where the collaboration worked very well, and we achieved this fungibility trial within the last few weeks. That the team really worked hard on this one. Thank you.
I think if I may add, Laura, OCBC and UOB have been partners for a long time, right? You know our ATM networks are connected, so you can withdraw from your OCBC account at UOB ATM. We can withdraw with your UOB account with OCBC ATM, so it's not new. So we have been partners as well as, competitors.
And definitely we are, and we may be seen as a competitor, and maybe fierce competitors, but it's only to deliver the best for our customers. So this is my last marketing spill. So thank you very much.
Wow,
Thank you.
That's a beautiful, beautiful answer. We love to see collaboration among competitors in order to benefit the end consumer. Thank you so much, everyone, for your time. Really appreciate it.
So we've heard one perhaps use of PBM, but PBM perhaps is not just used to control how pocket money is spent. We have the next speaker from JPMorgan, who is going to expound on the possibilities of PBM beyond vouchers, beyond restrictions of how grant money is spent. So let's welcome Wiki To on stage.
Thank you, Alan. So just a quick introduction about myself. I'm Wiki To. I look at business architecture for Onyx Coin System. I'm based in New York. Some of you probably know me better from my days when I was working on CBDC experiments, where I led Project Ubin in MAS many years back, and then Project Damba subsequently. But today I'll be talking about how we are looking at PBM and essentially the use of PBM, the concept of PBM for institutional purposes. So before that, let me just explain a little more about the use case. So if you think about payments today, a lot of payments are done for cross-border. In fact, for us at JPMorgan, a lot of our payments are in US dollars and across borders. Once you start thinking about payments moving across borders, they are subjected to different regulations in different countries. They are also performed by different entities as part of a cross-border transaction. So in what we are looking over here is essentially the ability to build rules around the movement of deposit tokens. What we are doing on-chain is essentially the ability to create rules, to execute rules, and to enforce those rules. What are some of these rules? The rules could be a proof of identity, a proof of KYC, certain form of transaction limits. For example, we can say that you can only allow transactions below a certain threshold. If it goes above the thresholds, additional checks have to be performed. There are also things like sanction screening, where we do certain matching of names to make sure that those transactions are allowed to go through the beneficiary or the sender are not in any sanctions list. There are also around the adherence to travel rules. So how you can think about this use case is that start thinking about it by having a JPMorgan deposit token. In our case, it could be a US dollar deposit token. And it could actually be transferred to the wallet of different customers of different banks. So for example, we do have correspondent banking relationship with various different respondent banks. Think of them as, there could be a bank X, bank Y, and bank Z. So their customers are actually able to hold those deposit tokens. Now, if you think of it from a traditional payments perspective, if there's a bank X using us for US dollar payments, Bank X has to apply certain set of validation, payments control on their customers before the payments are allowed to go through. What we're trying to do over here is essentially the ability to, for these different entities to impose their own set of rules on top of our rules for payments to go through. The intention over here is really to, for two different things. One is the adherence to banks' internal payments controls and policies. The other is really from adherence to local jurisdictions, local regulations for each of the different jurisdictions. So how it works is that we start with client A, being issued with a JPMorgan deposit token. This is actually done by the JPMorgan deposit token smart contract. So this is what we use for the issuance and then subsequently for the transfer itself. We also have a separate smart contract around the control. So this is where we are able to apply rules from a JPMorgan perspective. What happens next is really the beauty of what we are trying to do over here, where you could actually have different entities who have different set of rules. How do we actually apply some form of rules from different parties? What we maintain is actually essentially a mapping table that points to the different rules provided by different banks. So in this particular case, so in the first use case, if the payment were to go to client B, which is a JPMorgan client, we don't actually have to do additional checks. But assuming if the beneficiary is a bank XYZ client, now bank XYZ will have their own set of smart contracts which applies the rules on that payment itself. So through the mapping component, this is where we are able to direct to this particular smart contract to say, hey, please do what is necessary and tell us whether it's good to go. So if everything is good, then the transaction takes place through, again, our deposit token smart contract. Payment is actually made to the bank XYZ client. Now, when we first started doing this project, we essentially had two ways of doing it. One was really around the idea of wrapping rules, very similar to what OCBC and UOB explained just now. But when we were doing this, we do see that there are some complexities around the wrapping and unwrapping of rules, which is why we also wanted to propose a separate model where rather than wrapping and unwrapping every time there's a transfer, we essentially maintain a mapping a mapping pointer to all the different rules set up by the different banks. In this particular case, it's actually still very useful because each of the banks can maintain their own smart contracts, set up their own set of rules. What happens is essentially our smart contract will point to those smart contracts to check that the rules have been correctly performed and validated. So the idea behind what we are trying to do over here is really building towards this idea of a trust ecosystem where essentially different banks are able to issue different deposit tokens and they could circulate even outside of their KYC boundaries. Now, traditionally, when we think about deposit tokens or very much of what we have been doing for the other use cases, we think about it as transferring between within a group of the bank's customers. But a lot of the transfers that takes place today actually move outside of our KYC boundary into other banks where the recipient is actually on a different bank itself. So the idea around this rules mapping is really to help us achieve this idea where we can allow for transactions to take place in a way that is still safe and secure. Yeah. So on the application layer itself, I talk about some of these smart contracts, but we do see that we are able to implement even other capabilities as well, including, say, the use of data oracles to bring in different information for transaction processing to take place. Yeah. Okay. And that brings me to the end. Thank you.
Well, Wiki, since you introduced yourself as being ex-MAS, we're going to have probably more tough questions for you. So we're not going to let you off easily. So I don't know whether this is easy or tough for you, but maybe just start with a question because I believe JPMorgan has announced, I guess a week ago perhaps, this new capability around programmable payments. And here we are talking about purpose-bound money with payment controls. So maybe you can explain to the audience here perhaps what's the difference between the programmable payment capability that you have just recently launched or added versus maybe what you're trying to do over here?
Wow, thanks, Alan, for the question. It goes back very much to what, Alan, when you published the report last year, there's actually a very nice explanation of the difference between programmable payments, programmable money, and PBM. I shall not go too much into the details of all of those things so that, you guys will actually go check out the report itself. I find the report to be very good at explaining the differences between the three. But I would say that from a programmability perspective, we do see a lot of benefits from implementing programmability regardless of the different ways that we actually implement it. So I wanted to just share a bit also about, why we think programmability or programmable payments is so useful. Now, if you think about a typical treasury management use case, so there's always a client's platform and a bank's platform. Now, a client's platform is something like a treasury management system. They could be doing certain things like, target balancing, validating what is actually the account balances, and then, having certain instructions for the banks to actually move their payments. What happens typically is that the bank will tell the client that there has been a credit on your account. So from a bank's perspective, what they will then do is there's certain logic that says, okay, this particular account is in one of those lists that I need to manage, I need to review. The next thing that the client will do is to check with the bank, what is my balance? And then the bank will respond with a set of balances for all the different accounts that they have asked for. The next thing that the client will do is, okay, so what accounts do I need to, which accounts do I move my funds from? And once they have done certain set of evaluation, they instruct the bank again to move those funds. It sounds like a very complicated process, and sometimes it actually is. And a lot of the effort is actually spent on, just doing that communication between the two. Now, programmable payments is really interesting because if you take the logic from the client side, put it into the bank itself, you do away with all of this separate communication that you need because you have your data and your actions all within a single environment. That makes programmable payments really interesting, and it allows transactions to be done very seamlessly and very efficiently, and the design is very elegant. Yeah.
Thank you, Wiki. Now, we've always known that innovation is a funny thing. It often arrives with an excess of hype, and then it fades into disappointment before re-emerging into full bloom. On that note, would you be able to clarify the distinctions between JPM coin as well as purpose-bound money? And in your perspective, which solution stands out as a far more superior option in relevant contexts?
Thanks, Laura. You're not kidding when you talk about asking a very hard question. So first is, let me break down the purpose-bound money part of it. So you can think of it as two parts of it. First is the deposit token. How we think about it is this is actually value in a token form. And then there is the wrapping of the rules around it. So when we think about JPMorgan coin, that is what we have today on a blockchain-based payments platform. Value is actually recorded in an account form, while with deposit tokens, we are looking at value that's recorded in a token form. So what's the difference over here? Now, with an account, then, everything is tied back to this particular account itself. The banks know who is the holder of the account. It records the value, it records the value associated with each of the account. In a token-based model, from a recording perspective, you are thinking of it from this particular token of whatever value is being held by this particular entity itself. So from a technical perspective, there's differences in how it's being recorded. There's also at the other perspective, which is generally for account-based models, the accounts are all held with a single bank. With a token-based model, we can start to explore the possibility of barrel-like instruments where a deposit tokens can actually circulate beyond just the bank's customer to a broader ecosystem out there. So back to the example that we were giving just now, you could potentially have a case where a deposit token that's being issued by JPMorgan circulating to a bank XYZ, who is actually a client of JPMorgan, and allowing their clients to subsequently hold it. This is very similar to just now what the other OCBC and UOB were sharing about from a WCBDC perspective, circulating to the different banks and then allowing customers of their banks to hold it. So in that sense, a token form of value allows for some of these new cool things to happen. But of course, from a regulatory perspective, we do need, some better clarity in terms of regulations on how some of these new forms of relationship can actually take place. Thank you.
Thank you very much, Vicky.
Yeah.
No further hard questions for you.
Yeah. Thank you, Laura.
Last but not least, we have a sharing on the programmable rewards by Grab, FAS, and UOB. Can I introduce Wenpin, Tianwei, and Gyalpik to give us a download on the Singapore Pitstop industry pilot that has been live since September F1 launch and will continue into December. Now, guys, do please pay attention to the 4 presentations because at the end of the session, we would want you to vote which of the 4 sessions are the best solutions. And for the winners, please go to their respective booth and collect programmable vouchers from them.
Okay, thank you. Hi, everyone. Wow, thank you, everyone, for coming today and attending a talk at 4 p.m. on a very busy week. My name is Tian Wei. I'm one of the co-founders of StraightX. So StraightX is a Sing dollar stablecoin issuer that has been around for the last 4 years, and we're very happy to be one among the first to be granted the in-principle approval by MAS as of yesterday to be a well-regulated stablecoin based in Singapore itself. So today, I'm happy to come here with my friends from UOB and Grab to basically share a bit more about the progress of what we have been doing since last year, right? The idea here is to, on the vision of MAS and Alan and their team, to drive for real-world usage of stablecoins and blockchain technology. So maybe a show of hands. Who of you among here have been returnees, or you have been actually here last year and actually experienced some of this thing that we were talking about on stage? Anybody? So I guess there's quite a bit of friends that have been coming back again. So this slide might not be that unfamiliar to a lot of you, but for the benefit of the folks, I would like to actually give you guys a roundup of actually what started with the genesis of last year, based on MES vision of purpose-bound money, right? As a big agenda among them is that we would like to actually try, we've been hearing about a lot of promises of blockchain. We've been hearing about a lot of ability that blockchain can help to settle things like instant settlement and programmability, but we have not been able to see actually real-world application of that. And with the vision of MES of purpose-bound money, we were involved and asked to basically try a demonstration of that last year, live, during the FinTech Festival. So there were 4 major components of what we did last year to really sum it up. And the first of all is basically the concept of basically creating digital voucher on an industrial standard known as ERC 1155, right? So the underlying XX was XSGD, which we managed to tokenize. And then the second part of it is the distribution part of it. We were distributing it for free to all the FinTech Festival participants in a wallet of their choice, which is the third piece, right? You get to choose whichever wallet that's compatible with the ERC 1155 standard. So some of the folks have been experiencing it on the Sequoia app, on the Trust app, or on the MetaMask app. And then with that, they will be able to then spend this in the convention hall over a 3-day period at about 20 booths across the MAS, the FinTech Festival, purchasing products such as coffee or beverages itself, right? And these vouchers are the custom denominated in $1, $2, and $5 by design. And it has been designed that it only can be spent at the convention hall over the 3 days trial itself and automatically expires at the end of it. First, demonstrating live the whole entire purpose of this payment experience. And of course, last but not least, the entire trial was done with the help of Grab, being the merchant acquirer for all the 20 booths that's on the ground itself that you guys get to experience last year. But maybe now I'll hand over to my friend at UOB to explain what we have managed to achieve this year.
Thank you very much, Tian Wei. So I'm Gyalpik. I am from Group Channels and Digitalization with UOB. We didn't get any new license, but congrats to Tian Wei. So very happy to walk through. So last year, it was a pilot. It was held on-site at SFF. You've got 20 merchants. You heard what Tian Wei did and how we built out the foundation of what it looks like for PBM. This year, what we have done as a team is really to make sure to take this live. So this particular experience, I won't even call it a demo or pilot. I'll say, this particular experience is live, is commercialized. You can go out there, you could make a purchase yourself. And this is what we have done. In fact, this particular experience started at the F1 Grand Prix. So if some of you have been in Singapore as well for the F1 Grand Prix, you would have had the opportunity to actually buy the PBM of the Faith app. So you could have bought the Faith app, and you could have then dropped the PBM into the Grab Web3 wallet. And you could have used it among the merchants that we have put on board. So as opposed to saying that we're only going to do this for you for 3 days, only at this conference, at 20 merchants. In fact, what we have done is that, first of all, we get the funding, as with everything else, you get the money in there. We, UOB, together with StraightX, has the underlying digital token. So some of the conversations we had earlier on wholesale CBDC, all of that stuff with the tokens, what we have done in this particular pilot is that we have put 2 digital tokens underneath it to get the PBM wrapped around it, as opposed to last year where you only have 1 digital token. And as we moved down there where we wrapped the PBM, we went into the Grab wallet, like we say, the Web3 Grab wallet, which again is a mainstream wallet, as opposed to maybe some of the others that you experienced last year. What we wanted to do is to make sure that we bring this experience mainstream to the audience, mainstream to the consumers, mainstream to the market. So as we move through, when you then take your PBM in your Web3 wallet to spend at the merchants that have been whitelisted, you could then easily enjoy it the way you have always done it with your QRs, okay, as a consumer lens. And for the merchants, they also do not need to reconcile. If the conditions are met, it will automatically unwrap, and they will get the money that they needed. And we settle on the back end on the digital Sing dollars. So today, you can also experience this whole PBM on site in the conference, which is what Kenny from Amazon has spoken briefly. The Singapore Pitstop pack is within the Amazon booth. It is also on the Faith app. You can spend it today at the StraightX booth for some of these Irvin's merchants pack that you can take back, or you could spend it at some 200 merchants in Singapore. Whether you want to have your jumbo crab, whether you want to have your koi bubble tea, whether you are a tourist in Singapore, have never done the duck tour, you could go do that. So we wanted to make it real and live for the consumers in Singapore. And I just want to hand it over now to Wen Bing from Grab to really walk you through from the consumer lens angle.
Thanks, Galpik. So I'm going to play a short screen recording of a consumer making a payment at a bubble tea shop. But as we all look through the recording, let's all think through these 3 aspects of the transactions. The first, at the foundational layer, recognize that this is a transaction that's happening on the blockchain. It's happening on the blockchain. The PBM is sent across from the consumer across to the merchant. It unwraps and it settles. On the consumer front, look at how we've tried as much as possible to abstract the technology away from the experience so that it becomes as easy, as seamless as possible to non-native crypto users. But at the same time, try to spot the idiosyncrasies of a blockchain transaction that's taking place, such as authentication of the transaction, etc. And finally, on the merchant front, pay attention to whether or not we've managed to make it as seamless as possible for the merchant to accept the payments, and whether or not it helps to reconcile the settlement into their daily operations. Yes, so the whole experience, the whole concept was put to test in real life scenarios taking place in the hustle and bustle of everyday purchase of bubble tea in this case. There are some learnings. For example, on the good side, we managed to demonstrate that the infrastructure is able to support high frequency, low cost transactions. It is able to settle quickly enough for it to feel almost like a instant payment transaction. But of course, there are certain areas in which we can continue to improve upon, such as, for example, merchant education. In this case, the ability for merchant to accept hybrid payments, where the consumer starts to pay partially by the voucher and settles partially by the fiat money. So currently, the transaction is separated into two parts, and it requires the merchant cashier to be educated in order for them to accept the payments. Next, there are some commercial metrics that I would like to share. So of these merchants that's accepting PBM or Pitstop pack vouchers, 4 of these brands are hero merchants. What it means by hero merchants means that when you pay at a hero merchant, a user is entitled to a digital collectible that represents a specific precinct in Singapore. So Changi Airport, Clarke Quay, Mount Faber, and Kampong Glam. So a fun fact is that for the merchants who are issuing digital merchandise or digital collectibles, they contribute 40% of the total transactions of the 200 over outlets that's accepting PBM. So there is a commercial CVP for merchants to issue additional benefit or digital merchandise in conjunction with payments and selling their wares. Now, the second point is we developed the Pitstop pack and marketed it as a way to experience Singapore. It's a Singapore Pitstop experience pack. So of all the precincts that were issuing PBM or digital collectibles, 60% of the transactions took place in Changi Airport, Jewel. 20% took place at Clarke Quay, 15% in Kampong Glam, and 5% in Mount Faber. Still early days for us, but it kind of suggests that it's able to at least start to resonate with the Singapore experience CVP that we were trying to test out. The last metric that I would like to share is, of course, to do with the benefit. How compelling it is for someone to want to purchase such a PBM or voucher pack. So as we rolled out the campaign and voucher since Grand Prix, it was growing steadily. But we experienced a hockey stick growth in the last 3 days at the Singapore FinTech Festival. Previously, we were selling the voucher for $12 for a benefit, total benefit of about $17 in value. The last 3 days, we were giving out the vouchers for free, which is why we experienced a hockey stick growth in the last 3 days. So it also goes on to demonstrate that however we want to portray that the infrastructure, the capability is available, we still do need to spend some time looking hard into the business model so that the consumer value proposition becomes real. It allows users to, it motivates users to want to try this out and go through the experience of transacting on a blockchain. So these are some of the learnings that I wanted to share.
Thank you very much. We'll ask a couple of questions in the interest of time. So maybe just the same question first for me. What's perhaps the difference in terms of user experience? You mentioned about user experience versus existing payment mechanism. I mean, both of you are, actually all 3 of you, very much involved in the current payment experience. So what do you think is different perhaps with digital money that we can expect as a consumer or even as a merchant? I think you kind of highlighted that, but maybe just more specifically.
I can take the easy one, okay. I think from the trials and the 2 trials that we have seen so far, and this is of a much larger scale involving consumer itself, one thing that's actually quite really clear to us is that the technology is not the limitation. The business model and the user experience have to be refined based on the needs that we are trying to prove out. As you can see, the two part of this initiative have gone on already. They are all voucher-based system. So with an inherent design of a voucher-based system, you need to basically select the voucher and have a custom denomination tied to the voucher itself, which then introduced the friction that Woon Ping had mentioned, that you have to think about the fact that certain transaction itself, the one voucher might not be able to cover it. You might have to do two split payment. And because of the nature of a voucher, it has been designed that you have to consume it completely. So for $5 vouchers, if you pay $4, there was no refund, right? These are user experience stuff that is no longer limited by the technology, but something that we need to continue refining from a user experience side of these things. Because from the tech side of this, the technology allows you to create NFT voucher down to a single cent. And that's something with no additional cost from the tax perspective. So that's something definitely possible for us to refine over the next few experiences that we're going to work on.
Yeah, if I can just add on, other than the consumer lens, I think maybe from the banking lens as well. So with this particular experience, we actually will settle via fiat, so your normal settlement perspective. But just now when we talked about the earlier demo where we were on wholesale CBDC, technically, you know, if wholesale CBDC comes live and we get onto this whole concept of doing this on an interbank level, everything can actually be done on-chain, as opposed to now, which is still a bit of a hybrid. So whether is it from the consumer all the way end-to-end as an experience, I think there is that journey that we can go on.
So the mix on the stage is, I find it particularly intriguing, especially, you know, with a bank engaging in FinTech and exploring stablecoins alongside with your own bank tokens. So maybe Galpe, a question to you. Can you elaborate on the bank's vision for the digital landscape, considering this diverse approach to innovation and technology? And maybe a not so easy question for you as a follow-up as well. Which solution do you think is far superior? Is it stablecoins or bank tokens?
I was at the debate yesterday, and I think I know who won. No, I think at the end of the day, in order for the industry to grow, the truth is we need a diversity of views, and we need a diversity of experience, and we need to give the consumers various options. So it's not really for the bank to say, you know, you can only use this and can't use that. At the end of the day, the consumers are going to make that decision. I think through this particular experience, we have also learned from each other, you know, as peers in the industry, and that extends into the fungibility pilot as well. I think that's the important thing.
So let me add on by being the very, very neutral party here, because I'm standing in between the bank and the private stablecoin issuer. Ultimately, what we've just demonstrated is that the PBM construct is able to be funded by either a tokenized bank deposit as well as a privately issued stablecoin. So the construct and the whole framework is meant for us to scale and meant for us to continue to iterate and build upon the setup.
So maybe on that note, bonus question. Since we asked Galpe a question, we will ask Tian Wei and Woon Ping this. So I think the other announcement that you made yesterday was around wallet interoperability. Is that something that you could perhaps share? And just on the point about PBM as itself, right, being interoperable with different forms of money, is that something you could share based on your announcement yesterday?
It's still early days, but conceptually what we are trying to do with the wallet interoperability project, for context, just by way of introduction, Alan is referring to an announcement yesterday that Grab, StraightX, he has a lot of companies, and Ali, Ant International announced to collaborate on a potential setup where Alipay users or international wallet users can come to Singapore and pay at selected GrabPay merchants. So that's the idea. So sounds fairly straightforward, but what we are trying to do is to work on the infrastructure to enable settlement between Alipay or any other foreign wallets, international wallets, to local SMBs or small merchants to accept these payments in a very easy way. And the idea is to allow all these merchants to be integrated onto this network and be able to address the inflow of foreign spend with as little capital investment as possible.
maybe just to add on to Wimping's great answer is that I think maybe the thinking of angle here from an engineer perspective or a technology perspective, I think the openness nature of the blockchain and the interoperability nature of the blockchain introduce a different paradigm and more efficiency in the way you approach. In the previous time, if you want to do this kind of integration whereby wallet players want to integrate with a certain merchants, there will be a one-to-one integration mentioned earlier on that will take a couple of months, and once it's done, it will be a single integration. The next wallet player coming along will need to repeat the same work and repeat it again. And imagine the situation where you have 10 acquirer and 10 wallet players. We're talking about 100-time integration to make sure that they all work, right? And of course, the other approach, of course, is having a centralized server, which we have done for multiple different years. I think with the blockchain technology and programmable money, we're now introducing a new concept that we can actually do an integration one time, design a standard that is compliance by design because of how the PBM restrict the use case of the money and how the payment settlement happens real time, that allows this to be a lot more scalable. Because once this is being done by the Grab merchant itself, another wallet player coming along now just have to simply follow the same framework as long as they use the same standard provided by PBM. The transmitting of the stablecoin in the PBM form will trigger a payment offline real time. So that is some of the benefits of a blockchain open ecosystem brings about.
All right, I think that's all the time that we have. We shall not ask the team any more tough questions. Please put a warm applause to all our speakers for Project Orchid Digital Money in Action. To see digital money in action, please visit their respective booths and check it out yourself. Thank you very much.